Trading Ideas for the week of April 25, 2022. For as long as I remember, for the past 37 years, which I've been on investment management, I don't recall with the situation that we are in, with the inflation progressing and interest rates rising, Fed having a soft landing. So I don't think this is going to be an exception, and we are for a rough ride. I hope there's always a first time. We wish for that, and that's a hopeful thought. With the week coming in April 25th, I think there are three things we have to remember. Number one has already happened, and that was the election, the French election, and Emmanuel Macron has won his presidential election. He was the sitting president. Usually French don't like to re-elect their presidents, but in this situation, he was going against Le Pen. So anyway, so this news is out, and I see that has consequences about the euro's direction. The second thing is the interest rate decision in Japan. So we want to pay attention to that, especially with the Japanese yen in a 20-year low versus US dollar. And the third thing is this is the Super Bowl of earnings. This is the heaviest earning week. We have about 180 earnings out of 500 S&P 500 companies. So there are heavy hitters coming. So we want to pay attention to that. So with that in mind, let's dive in and see what happens on Monday. Monday, we had the South Korea's GDP, and we want to pay attention again to the GDP and all the other elements which make that up, because the consumers are the key, and they are the ones we are going to help with their economy. So the GDP, we want to see where they stand. So all of these countries, we want to pay attention. Japanese unemployment rate, Spain's the PPI, the producer inflation, Turkey's business confidence. These are important, again, for the direction of the economy in these countries. And consequently, actually, as a global market, we have to pay attention. Now, the earnings season starts with for the week. Actually, this has already started the last few weeks, but the major one starts on Monday morning with Coca-Cola and Activision. They will have it before the open. So I put down the major ones. I cannot put 180. I thought the ones that are gonna influence the market. So we're gonna emphasize on those. On Tuesday, Australia will have their inflation rate, and then US have few important economic news coming out. This durable goods orders, the Case-Shiller home prices, new home sales, and consumer confidence. And then Germany, France, South Korea, and Mexico will also have the consumer confidence. So I want to pay attention to this. Again, what is happening with the inflation? We want to see where the consumers are standing. Argentina will have retail sales. So again, this is a reflection of the consumers, their confidence in the economy, and what their thoughts are. Now, our earnings on Tuesday before the open, we have the UPS, General Electric, the 3M, and Pepsi. And these are the biggies. After the close, we have Microsoft, Google or Alphabet, Visa, General Motors, and Chipotle. So let's pay attention to that. So you see a variety of companies coming with their earnings. Now we move on to Wednesday. Let's pay attention to, again, the central bankers. United States, we are in a quiet time because of we're going to have the Fed decision in the beginning of May. So they are not going to be speaking, but the Europeans and other countries, they will be talking. And in this situation, President Lagarde from the European Center Bank, she's going to have a speech on Wednesday. Russia will have their unemployment rates, retail sales, and GDP, and South Korea will have their business confidence. Now, here's Japan. They have the retail sales, and the interest rate decision is coming on Wednesday. So we pay attention to that. And as always, at 7:30 a.m. Pacific time, we have the crude oil inventories. The earnings on Wednesday before the open, we have the Boeing and Spotify. And again, other biggies coming after the close. We have the Metaverse or the old Facebook, PayPal, Ford, Qualcomm, and Pinterest. Again, different industries, so we want to see what their guidelines are. We don't want to see where they've been, we want to see where they're going. On Thursday, Spain has its unemployment rate and inflation rate. Italy and Europe as a whole, Eurozone, they have the consumer confidence. South Africa, Brazil, and Australia, they will have the producers' inflation. Mexico will come up with their unemployment rate, and Turkey and Germany will have inflation rate. US will have their GDP preliminary quarter over quarter numbers, and South Korea will have their retail sales, and France will have their GDP year over year inflation rate and the producer price index, which is the inflation for the producers. As always, Thursday are our gold trade, so don't forget about that. And this is the biggest day. And I love Thursdays for earnings as far as strategies, if you do options. And this is going to be a good day for you if you want to do that. The earnings in the morning before the open, we have the MasterCard, Twitter, we have Southwest Airlines, McDonald's, and Merck. And after the close, the two biggest ones are Apple and Amazon, and Intel, Robinhood, and Roku after the close. And here comes a Friday. Friday, we have Spain. It's going to be a busy, actually, Friday. Spain will have their GDP year over year and retail sales. Turkey will come with the tourism revenues. And we talked about on our Saturday's report that, again, tourism is coming back to Southeast Asia. We want to pay attention to these countries because they play a big role, a big part of their GDP. Germany and Mexico will have their GDP year over year. Euro and Italy will have their GDP as well as inflation rate. Russia will have their interest rate decision. We want to pay attention to that. And US will have the PC price index. This is important because this is what, rather than CPI, this is what the Fed pays attention. And there's an inflation numbers as far as the consumer expectations. Now, Michigan consumer sentiment will also be out. Argentina will have consumer confidence, and China will come out with their the purchasing manager index in the service and manufacturing. So pay attention to that. As always, 10 a.m. it is the on Pacific Coast time. We have the Baker Hughes oil rig count. We want to see how they stand. The big earnings will be in the energy and healthcare. We have the Exxon and Chevron will be before the open, as well as Bristol Myers. So I hope this is informative. Please pay attention to these, again, upcoming events, as well as the earnings. So speaking of earnings, before we go to that, I thought just share a fact with you. This is from the Stock Traders Almanac, which is a wonderful reference. If I would encourage you to look into that. Now, as you know, Friday we had the markets drop 2.82%. So we're gonna look at the Dow Jones Industrial Average. This was on Friday. And what they have done a study, and going back, actually, I've seen as far as 1995, what has happened. What happens if the Dow Jones Industrial Average drops on Friday and Monday? So Monday is an important day. So if we have 2 days in a row, the last day and the first day, what happens to the market? So here is the findings. Since January 1, and again, I've gone back to 1995, and I remember, again, it has worked since then. But since January 1, 2000 through today's close, actually, this is as of the Friday, July 16th, 2021. So that's the today on that letter. So there has been 221 Dow Jones Industrial Average down Friday and down Monday. And what has happened from the closing high within the next 7 days, calendar days, to its closing low in the following 90 calendar days, the Dow Jones Industrial Average has declined 212 times with an average loss of 7.21%. The declines following this Friday, Monday down were greater in bear market years and milder in bull market year. So we are not in a bear market territory in NASDAQ yet, but we are very close. So we could use those numbers for that. The Dow Jones is in a correction. So the 8 times when the Dow Jones Industrial Average did not decline with 90 calendar days after we're following again down Friday, down Monday, that they were on October 7, 2002, May 19, 2003, November 17, 2003, February 3rd, 2014, October 13, 2014, and October 31, 2016, as well as September 25th, 2017 and October 9, 2017. So when the Dow Jones Industrial Average closes on Monday of the down Friday, down Monday, which is used as the starting point of the subsequent declines, which is a lower price. So we have to see what happens on Monday. So if Monday goes up, well, we can ignore this. But if it goes down, the clock starts. So since then, the Dow Jones has declined an average of 5.73% over the next 90 calendar days. But there were 38 times when no further decline occurred. And in the chart above, which was the previous page, we will go back, the 30 trading days before and 60 trading days after the Dow Jones down Friday, down Monday have been plotted alongside the 38 times there was no lower and low after Monday. So based on the chart and the previous chart, if the Dow Jones average, it recovers its recent losses within about 4 to 7 trading days, then the DFDM that just occurred may have been the majority of the decline. However, if the DJIA is at about the same level or lower than now after this window, additional losses are more likely over the next 90 calendar days. So as you can see, this is what has happened, and these are the days that there was no decline. So you see what has happened in the going from the 30 to 90 days. So pay attention to that. So just a heads up, again, we had a down Friday. Again, if tomorrow we have it done Monday, I hope this is a good reference. So let's dive in for the next few minutes and just talk about stock of the week. I thought with the big earnings coming up, let's focus on one of the darlings of the whole markets, the Apple. Now, Apple has a wonderful reputation. Everybody is aware of them, and they use their products in many ways. And like a market, you see we've had a nice decline after we hit the resistance. And basically, this was our big support at around 163. We broke through that. And now the next zone looks like 160, but the major zone, which I would look into, and we will have another chart to see, this 150 is the major one. So whether we will hold at the 200-day moving average, that's important. And of course, we have the earnings coming up on Thursday afternoon after the close. So that's going to be obviously a big factor. But right now, we are in a distribution, at least in the short term. So when we look at as far as how from the fundamental and as far as investor business daily, how they look at it, obviously fundamental, there's a lot of strength. The relative strength is at 84 here. And then, as I mentioned, the 200-day moving average is coming up. So that would be natural support, at least in the short term. But again, that Thursday earnings is important, especially if you're talking about the projection. So you see the moving averages are crossing. So that's bearish. That's the death cross. And they are just happening. So we'll see if Monday reverses, that's going to negate this. But we want to watch for that. And when we look at, again, all the earnings that we've had, this is a weekly. So I want to look at the weekly. We are in a squeeze. So the last time we were in the squeeze, the momentum was up. This time, the momentum has been down. Our A wave is down, and our C wave, which is the long term, our short-term wave, the A wave is in the red. It's like kind of flat, so we are not completely down. Our relative strength is actually has been going down, and basically this squeeze out weekly. We have to go back to the, actually, believe it or not, this is the last April. So exactly a year ago, we had the same type of a squeeze, but it was only 2 weeks. And after that, the momentum was down. So we actually sold off in last April of 2021. But the interesting was we stayed around the 20-week moving average or 21-week moving average, and we just floated around it. The squeeze had fired to the downside, and then we reversed after a few weeks, and then we had a nice up move. So we want to watch to see if that will be repeated. But initially we sold off, and right now we are sitting right under the 20-week moving average. So this is 1 week. As you know, I like to have 2 confirmations. So it's very important with the earnings coming up again this Thursday. We'll see if we are gonna reverse back over the 20-day, or we are gonna actually go down and eventually kiss the second standard deviation in our linear regression channel. And then when we look back and you can see all the earnings, this is food for thought to see where we stand after the earnings on a weekly basis. So most of the time, we've been above the 21 weekly moving average, except obviously this is where the COVID started, the March and April of 2020. So obviously we had a hiccup, but after that, we have been comfortably above that 20-week moving average. So this is a squeeze. Squeeze hasn't fired yet, but the momentum is down. The long bars, the C waves, the momentum is down. So on a short run, we have pressure to the downside. So be aware of that. The other thing is, as I mentioned about, I look at even shorter moving average. I'm looking at the 8-day and the 21-day when we look at, and then of course the long term will be 50. We are below all of that. On Friday, we just broke below that. As you can see, my support line is around 150. So would that be a magnet? Now, having said that, we have that earnings coming up on Thursday afternoon at 1:30. And we, again, some of the option strategies we've used, look what has happened to implied volatility. So basically, all the stock has been going down. Imagine if you would have bought a put option, just a naked put option. That would have been interesting because you would have had implied volatility expansion as well as the direction. But let's assume you didn't know. Perhaps it would have been a good time for spread or strangle, something that would have taken advantage of this big implied volatility moving average. So what happens? Let's talk about the earnings. Now, the Apple is, again, will be coming with their earnings at 4:30 p.m. Eastern time on Thursday, April 28. So pay attention to consensus, but more than that, to the earnings whisper. So consensus really mean nothing. I mean, the market has already priced that in. So the estimate is at $1.43 with a revenue of 94 billion. But the whisper is at 157. This is the number they have to beat. Investor sentiment going into the company's earnings release has been 71% expecting an earnings beat. Consensus estimates are for year-over-year earnings growth of 2.1% with the revenue increase of 4.96%. Now, the short interest has increased by 12.7% since the last earnings, which was in January release, while the stock has drifted lower by 2.4% from its open following the earning release to be, and it is about 1.6% above its 200-day moving average, as we talked about that, again, 160 area, 159.27 to be precise. Overall, earning estimates have been revised higher since the last earnings in January. And on Thursday, April 21, there was some notable buying of 42,688 contracts of 175. So there is obviously some positive expectations, and those are all right after the earning release, which is next Friday. And the option traders are pricing a 5.9% move on earnings, and the stock has averaged 3.2% move in recent quarters. We will look at that. So you can see, again, there's a positive expectations. but what can we do? So I want to go back. It goes back to all the earnings since 2015. You see, majority of time, this is the actual and this is the expected. And except a couple of times it was just flat, they have been beating their expectation. It's just given. So as you can see, especially in January, that was big time. The question is going forward with the supply chain issues and with the, again, the consumer concerns and all that, what Apple has to say. And of course, you're talking about the iPhone 14 and the 16. So the expected quarter earning is at 2.1%. And the revenue is at 5%. And for the annual earnings, they're expecting 9.8 and revenues at 8.3%. The previous, believe it or not, annual earning was at 71%. And the revenues were at 33%. So the market, this is what they're expecting. So that's what they have priced in. And again, as you can see, I just want to give you exact numbers, like April of to 2021, that was a big beat. It beat it $1.40 to $1 expected or estimated. The same thing, what happened was in 2020, they beat it 64 cents to versus 52 cents and so on. So the only time you see it's kind of flat was in 2018, beat it by 1 penny. And then also in 2017 by 2 pennies. And then the only time really was flat and down was 2016. They actually were down by a penny. And after that, in 2015, they were up by 3 pennies. So right now, that's what we are looking at, $1.57. The consensus is $1.43. This is what you pay attention. And the revenues at 94.03 billion. So that's when you have to analyze it after the numbers come out. So the short term, you could notice that there is a price pressure, and that's we have to watch for, even intermediate. But the long term, when we look at the weekly and then go to the monthly, they're still in a positive trend with the relative strength still positive. Investor sentiment is positive, but the analyst sentiment is to the down, and earning estimates have been upward revised, so that's positive. So let's look at from the option pane. We look at what happened on Friday. Again, we closed at 161.79. Our sizzle index, there was not a lot of activities, believe it or not, but you see there's a pressure actually to the downside, in the sense that not too much, that the market's 285,000 to 265,000 bid versus ask. So there was more of a call sellers than call buyers. And the same thing as far as on the put side, there were more put buyers than put sellers, but it's not tremendous amount. So it is just a little bit, but we want to pay attention. So there's not a lot of enthusiasm. And when we look at it, there was a lot of activity in May when I looked at it. And this is the 20th of May. We had at 145, we had a big 9,252 contracts were purchased. So these are both an ask, and they were bought at the market. So they were really at the ask. So it was $2 and they bought it $199 at 2. And then there was a 190 call. Now remember, we're at 161. This could be, it doesn't say spread, but it might be a strangle. It could be iron condor. So we don't know, but that looks like a play perhaps, because there's like a heavy volume induced in these two on some type of option strategy. Now, the expected move for as of today for the Friday, the 29th, is, as you can see, is $9.83. So that means they think that, let's say $10. The expectation is by next Friday, Apple will be at 171 or will be at 151, somewhere around that. But look at the implied volatility. Today is Friday, by the way. So, I mean, this is Friday's closing. So what we want to look at Monday and Tuesday and Wednesday, we want to watch that implied volatility and compare it to the May 6th, which is the following after the earnings have already come out. So basically we want to watch for that. And based on that, we might set up a strategy. Now, at this moment, we want to watch to see if there's any IV, let's say at the money, depending on Monday when this happens at 162, 150, 159, whatever it is, you might want to do a calendar depending on, again, where the implied volatility is. So I won't do it on Monday. I believe, obviously you can see the volatility is expanding. So I usually do it, if it's Thursday, I will do it on a Thursday afternoon. So perhaps, 5-10 minutes, 30 minutes before the close. And that would be something that you could do and close it on Friday. So that's a food for thought. You could either play the put side of things or the call side of things. This is going back to all the quarterly earnings. So this was the last year's. As you can see, the beat was $1 versus 1, but yet the stock actually dropped. So these are every single quarter going back to April 30th of 2020. So basically they've had positive reaction, they've had negative reaction, but eventually it's interesting that they end up after a couple of weeks or so, they end up going positive. So this is the last 2 days right before the earnings. So pay attention. You see implied volatility has been just expanding. And with that in mind, I hope that was helpful. I wish you a wonderful, prosperous, and successful week ahead till we meet again next week. Have a wonderful week. Thank you.